So you're filling out the IRS Form W4 and you want to know, how can I get a bigger paycheck, reduce my taxes, and get more money into retirement all at the same time? So I'm going to show you exactly what you need to do and how to think about the IRS Form W4 so you can maximize your future, reduce those taxes, and of course, get a bigger paycheck. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So if you haven't already, you want to use the IRS Form W4 online estimator at the irs.gov. I'll leave a link in the description at the bottom. Now, if you have the paper version, why do I always go through the online estimator? Because it's the most accurate way to do this. It's the best way to do it. And don't take my word for it. Go to the IRS's website and look at it, and it will tell you to use the online estimator. It's going to be so much easier if you just use the estimator. But I promise you, at the very end, it's going to give you exactly what you should put on the IRS Form W4 paper version. And I'll show you exactly where to click as well. So let's go ahead and pull it up on the screen and go through an example so we can show you how to increase your paycheck, pay less in taxes, and put more money away for retirement. So let's go ahead and take a look. So this is the online estimator from the IRS's website, the tax withholding estimator. So we're going to go through it together, and I filled this out to make this walkthrough a little bit quicker because you've probably watched one of my other IRS Form W4 videos, but you really want to know how to tweak it to maximize that paycheck. So in this example, whether or not you're married, filing jointly, or single, the concepts are going to be exactly the same. But for this video, I'm going to show you somebody that's filling out as single. So go ahead and fill out your filing status right here. I'm going to fill out as single. Can anyone else claim you as a dependent? No. Dependents for this walkthrough? No, although it won't affect it, but you'll see that later on. Income? Yes, you do have income. You have to have a job in order to fill out the IRS Form W4. So put in yes. Now here's where a lot of people get tripped up. I'll make a quick note of that. Put the amount of jobs that you're going to have all year long. So if you had a job, now you have a second job, the answer is 2. And we can fill it out on the next screen. If you only have one job, put in 1. If you have 3 jobs at the same time, put in 3. However many jobs you're going to have for the year 2021, you want to put that number in right there. Even if you had one for 2 weeks and you no longer work there, add it to this number. So if that's more than 1, put 2, 3, 4, whatever applies. So for this walkthrough, we're just going to go ahead and put 1. Do you have a pension? For this walkthrough, we're going to say no, nothing else for the rest, and we're going to click on next. Now, for this one, you're going to need your most recent pay stub. If this is a new job, don't worry about your pay stub because you're going to put in 0. I'll show you exactly where. So we're going to check off that you do expect to hold this job all year. Again, just for this walkthrough, we're going to say yes. If not, check off no and put those dates. Otherwise, check off yes. How frequently are you paid? Every 2 weeks. For this walkthrough, every 2 weeks. We're going to say our last paycheck was on 4/1. For this walkthrough, it's going to be $100,000. Now, I'm going to point out that if you haven't had this job since January 1st, then that number right there is only going to be your estimate of what you're going to earn in 2021. So if you earned $100,000 and you only worked there for 11 months, then you're only going to take 100,000 divided by 11, and that's the number that you're going to put there. So that's how you want to do that math. It's only for this year, not what you make on an annual basis. $100,000, that's our example today, no bonuses. So year to date, and these are the numbers you're going to pull off your pay stub. If you just started working and don't have a pay stub, the answer is going to be 0. But for this walkthrough, I'm going to assume $4,000, which is kind of close to what we would have withheld anyways, earning $100,000 as someone that's filing single. And then per pay period, you're going to see the per pay period on your pay stub. So again, put that in there. We're going to assume $600. Will you have a retirement plan? Right now, I'm going to say no. Now, whether it's a traditional IRA, a Roth IRA, or a workplace retirement plan, we're going to come back to that. But for right now, we're going to check off no, just so you can see the difference. And do you have an HSA, FSA, or any other pre-tax contributions or savings or anything like that? We're going to check off no for this walkthrough. Again, the HSA, FSA will reduce your taxable income, but we're going to put that on hold for just a minute and come back to it. Click off next. And then we're going to go through, we're going to skip this section for the adjustments. We're going to come back to the adjustments. This is an important page. Then we're going to click off next. Our standard deduction is what most people are going to use. They're not going to itemize unless you're a small business owner, but that's completely different. Deductions are going to be your standard deduction. It's right there, $12,550. If you don't have more than $12,550 in itemized deductions, then you're going to take the standard deduction. That's why we're choosing it. Going to check off next. We're not going to look at tax credits for this walkthrough. Check off next. Okay, so this is what we're dealing with right now. I earn $100,000 as somebody that's filing single. That means we're going to have $15,015 as our anticipated tax obligation, that second line item. Now, based on the information we provided, it's saying our expected withholdings, if we don't do anything differently, we're going to withhold $15,400, a little bit over. We're going to get a little bit of a refund of $385. So now we have basically our baseline of where we're at. So this is going to show us exactly how much we're going to get in an estimated refund. Now you want to figure out, how can I get a bigger paycheck, reduce my taxes, and put a little bit more money away for retirement? So let's take this math for just a second, and I'm going to show you on a piece of paper. We're going to take $100,000, and we said in this walkthrough, going back to the income and withholdings, we said every 2 weeks. So every 2 weeks is 26 times a year. Let's change that to twice a month to make the math a little bit easier. We're going to divide it by 24, and we're going to go to the very end, and that is going to show us probably slightly different numbers. Nope, $15,015. But our expected tax withholding, that got adjusted because now we have two less pay periods. So twice a month is 24 pay periods. Every 2 weeks, that's going to be 26 pay periods. So just pay attention to that. So for this walkthrough, $100,000, but our anticipated tax obligation is still exactly the same. So let's go ahead and draw it out or write it out. So we have $100,000 that we're earning throughout the course of the year. And if we divide that by our 24 payments for the year, or 24 paychecks, that's going to equal $4,166. So we can assume that we're going to have a gross check from our employer of $4,166. Now we need to figure out the taxes. So the federal taxes, the only thing that we're going to look at in this walkthrough, we're going to take that $15,015. So I'm going to write $15,015, and we're going to divide it also by 24, and that's going to give us $625. So I'll show you on the calculator real quick. Break it out. $15,015 divided by 24. That's our $625, and we're rounding here. So $625. So this is what your paycheck's going to look like. We're going to say that we're earning a gross amount of $4,166, but they're going to take out $625 for taxes. So $4,166 minus our $625 is going to be $3,541. So that is going to be our take-home pay. So that's what's going to hit your bank account. So gross amount is what's on the top line of your check, withholdings, and then what's left is your net. So in this instance, it's $3,541. Now, what if we put more money into our traditional IRA or our traditional 401k or 403b, any retirement plan pre-tax? That is going to lower your taxable income. So that means we're going to have to withhold less. It means a bigger paycheck. So let's go here and show what that looks like. Now, I'm going to show you the adjustments page because this is going to be for the traditional IRA, and we have it right. Where is it? Right there. So we have deductions for contributions to an IRA. So this is pre-tax money. So the maximum amount is $6,000. So we're going to go ahead and put in $6,000 so you can see what it looks like from this walkthrough and how it will affect your paycheck. So if we put in $6,000, that means our adjusted gross income will fall by $6,000 because now it's being taken off of that $100,000. So at the very end, we're going to see that we're going to pay less in taxes. So instead of $15,015 estimated, it's going to drop to $13,673. So if we go back to this number over here, our $15,015 and we subtract our $13,673. So let's do that in the calculator. So it's going to be 15,000 minus 13,673. That is, we're going to lower our tax liability by $1,342. That means we're going to get a bigger paycheck. So when we do that math, we can actually take this number and divide it by 24, and that's going to be $55.91. So let's round that to $56. That means we can add back $56 to each paycheck. So let's just round that again to $35.41 plus our $56. That's going to be $3,597. So now we put more money into our traditional IRA, reduced our tax liability, but got a bigger paycheck. But if you're following this, we put that money after we got that bigger paycheck to pay less taxes into our traditional IRA. So if I rewrite these numbers, $3,541, and then we're putting the money into the traditional IRA, so our paycheck is going to be $3,597. Don't forget, even though I have a bigger paycheck, we still have to put that money into the traditional IRA in order to get that tax benefit. Well, $6,000, if we take our $6,000 divide by 24 paychecks is $250. So what this really means is that we're then putting in $250 per paycheck into our traditional IRA retirement plan. So we really have to subtract it. So that means our $3,597 minus $250 is $3,347. $3,347. So while we technically are increasing your paycheck, reducing your taxes, and putting money away for retirement, in the example you can see that we have less money left over on a daily basis. Now, if we go back to the online estimator for a minute, that last page and scroll down, what we can see is this link right here, Form W4. And this is not only the paper version, but it's a pre-filled out version based on the information that we provided. Now, if yours is blank, just go ahead and put the information at the top, your basic information, and then sign it at the bottom. Now, on this one, it's saying that we need to withhold an additional $26 per pay period. If we deleted that, that means we would have $26 back in our paycheck, but it doesn't change the tax liability at the end of the year. And it's really important that you read this last line where it says, is this true and accurate to the best of your knowledge? Well, if you fill it out basically fraudulently, well then guess what? You might have some additional taxes and penalties because by law, you're required to withhold throughout the course of the year. Now, really at the end of the year when you do your taxes, that's kind of like settling up with the IRS. The tax liability doesn't change. It's still going to be $15,015 based on the information that we provided originally, unless you have some adjustments like tax credits or other deductions. But it doesn't change how you fill out the W-4. It's just like settling up at the end of the year. If you don't withhold enough, you're going to end up having to pay. And if you withhold too much, that is how you get a refund. So nothing you do on the IRS Form W-4 is going to affect the total tax liability. It's just going to be the timing of it. And again, if you fill it out incorrectly on purpose, that would be fraudulent and that is not the way to go. So enter it in as accurately as possible so you can make sure that you're withholding the correct amount. If you have any questions on this, let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.